The next market crash is coming. Most people will panic. Their savings? Gone. Their investments? Crushed. But what if I told you that crashes create millionaires? Robert Kiyosaki isn't just predicting the next financial storm. He's revealing how to profit from it. The biggest wealth transfer in history is about to happen, he warns. While others lose everything, a select few will multiply their wealth. The difference? 3 powerful secrets that separate the rich from everyone else. These aren't complicated strategies. They're not get-rich-quick schemes. They're proven wealth principles that work especially well during economic chaos. Ready to be on the winning side of the crash. The time to prepare isn't when it hits. It's right now. Economic crashes might sound like the stuff of nightmares, but for those in the know, they're golden opportunities. Harry Dent, a renowned economic forecaster, has spent decades decoding the patterns behind these downturns. His books, like 0 Hour and The Sale of a Lifetime, reveal how financial chaos often paves the way for massive wealth creation. Think about it, when markets tumble, assets go on sale. It's like Black Friday, but for the financially savvy. The key is having the right money mindset to spot these opportunities while everyone else panics. Dent's insights highlight the importance of understanding the psychology of money during turbulent times. Most people cling to a scarcity mindset, fearing loss and hoarding cash. But the wealthy, they see abundance where others see despair. For instance, during the 2008 crash, those who bought undervalued stocks like Amazon reaped massive rewards later. It's all about reprogramming your mind for wealth, training yourself to think like a millionaire when the world feels like it's falling apart. But here's the kicker. Predicting these crashes isn't just about luck. It's about patterns. Dent's work shows how demographic shifts, like the spending habits of baby boomers, can signal when the next downturn might hit. And when it does, those with a financial freedom mindset will be ready to pounce. The question is, will you be one of them? Or will you let subconscious money blocks hold you back? Deflation might not sound as flashy as inflation, but it's a silent force that can shake up entire economies. Harry Dent dives deep into this concept, explaining how deflationary periods often follow massive economic booms. It's all tied to historical patterns like the Kondratiev wave, which shows how economies rise and fall in cycles. During deflation, prices drop, and assets like real estate and stocks can take a nosedive. But here's the twist. While most people see this as a disaster, those with a wealth mindset know it's a chance to buy low and prepare for the next upswing. Take gold, for example. Dent predicts that its price could drop to around $700 during the next deflationary wave. That's a far cry from the gold is always safe narrative many believe. But here's the thing, gold's behavior in deflationary periods is tied to commodity cycles, not just blind faith. Understanding these cycles can help you avoid overvalued assets and focus on opportunities that others overlook. It's all about breaking free from outdated money beliefs and seeing the bigger picture. Market cycles aren't just about numbers, they're about people. Demographics play a huge role in how these cycles unfold. Dent's research shows how the spending habits of different generations, like baby boomers and millennials, create ripple effects across the economy. Recognizing these patterns can help you sidestep the scarcity mindset and embrace an abundance mindset instead. After all, the market doesn't crash forever. It resets, and those who are prepared reap the rewards. So, are you ready to ride the wave? Or will you let fear keep you on the sidelines? When markets crash, most people run for cover, but the savvy investor knows that's the time to strike. Harry Dent emphasizes that financial downturns are like a clearance sale for the bold. Think about Amazon during the 2008 crash. Its stock was undervalued, but those who had the financial psychology to see its potential made a fortune. The trick is to focus on assets that are temporarily beaten down but have long-term growth potential. It's not about luck. It's about having a wealth mindset and knowing where to look. But it's not just about what to buy. It's also about what to avoid. Overvalued assets like McMansions during the housing bubble can be financial traps. Dent warns against falling for the illusion of stability in assets that are overpriced. Instead, he points to emerging markets, healthcare, and senior living as areas ripe for growth. These sectors are driven by demographic shifts, like aging baby boomers and the rise of millennials. making them prime opportunities for those who can think ahead. The key to profiting during and after a crash is preparation. It's about reprogramming your mind for wealth and seeing opportunities where others see chaos. For example, as the global population ages, senior living facilities and healthcare innovations are set to boom. Meanwhile, emerging markets offer untapped potential for those willing to take calculated risks. The question is, do you have the financial freedom mindset to seize these opportunities? Or will you let subconscious money blocks hold you back? Gold has always been seen as a safe haven, but Harry Dent challenges that belief with a bold prediction. Gold prices could drop to around $700 before entering a long-term bull market. That's a shocker for anyone clinging to the idea that gold is immune to market cycles. Dent explains that during deflationary periods, gold doesn't behave the way most people expect. Its value is tied to commodity cycles, and understanding these cycles is crucial for anyone serious about building a wealth mindset. Take a step back and think about it. Gold isn't just a shiny metal. It's a reflection of economic psychology. When fear grips the market, people flock to gold, driving up its price. But in a deflationary environment, when cash becomes king, gold often loses its luster. Dent's insights show that timing is everything. Knowing when to buy gold after it bottoms out can be a game changer for those looking to reprogram their mind for wealth and avoid the herd mentality. Commodities as a whole follow similar patterns. Whether it's oil, silver, or agricultural goods, their prices are deeply influenced by global economic trends and demographic shifts. Dent's research highlights how these cycles create opportunities for those with a financial freedom mindset. Instead of chasing what's popular, the key is to anticipate what's next. So, while others are stuck in a rich versus poor mindset debate, you could be positioning yourself for the next big move. The question is, are you ready to think differently? If you've ever wondered why some economic trends seem so predictable, the answer lies in demographics. Harry Dent often says, demographics are destiny, and he's not wrong. The spending patterns of different generations, like baby boomers and millennials, shape the economy in ways most people overlook. For example, baby boomers drove massive growth in the housing market during their peak spending years. Now, as they age, opportunities are shifting towards senior living and healthcare. Recognizing these patterns is key to developing a wealth mindset and staying ahead of the curve. Millennials, on the other hand, are stepping into their prime spending years, and that's a game changer. Dent predicts a millennial-driven economic boom starting in 2023, fueled by their demand for housing, technology, and experiences. This isn't just a theory, it's already happening. Companies that cater to millennial preferences, like tech startups and sustainable brands, are thriving. If you can align your investments with these trends, you're not just riding the wave, you're creating your own financial freedom mindset. But here's the kicker. Demographics don't just create opportunities, they also expose risks. Countries like Japan and parts of Europe are facing demographic challenges, with aging populations and shrinking workforces. Meanwhile, emerging markets with younger populations are poised for growth. Understanding these dynamics can help you avoid the scarcity mindset and embrace an abundance mindset instead. The question is, will you adapt to these shifts, or will you let outdated money beliefs hold you back? The global economy is like a giant puzzle, and demographics are one of the most important pieces. Harry Dent's research shows how regions like Japan, China, and Europe are grappling with aging populations and slowing growth. Japan, for instance, has been stuck in a deflationary spiral for decades due to its shrinking workforce and low birth rates. Meanwhile, China's one-child policy has created a demographic time bomb, with fewer young workers to support its aging population. These trends highlight the importance of understanding the rich versus poor mindset on a global scale. Some regions are poised for growth, while others face stagnation. But it's not all doom and gloom. Emerging markets like India and parts of Africa are brimming with potential. These regions have younger populations, growing middle classes, and untapped opportunities in sectors like technology and infrastructure. For investors with a financial freedom mindset, this is where the action is. It's not just about chasing high returns. It's about aligning your investments with long-term growth trends. Think of it as planting seeds in fertile soil while others are stuck watering barren ground. The key to navigating global economic trends is staying informed and adaptable. Dent's insights show that the world is shifting, and those who cling to outdated money beliefs will be left behind. Whether it's understanding the impact of demographic shifts or spotting opportunities in emerging markets, the goal is to reprogram your mind for wealth. So, while others debate scarcity versus abundance, you could be positioning yourself for the next big wave. Are you ready to think globally and act strategically? When it comes to economic crashes, preparation isn't just smart, it's essential. Harry Dent and his peers stress that downturns are inevitable, but they don't have to be devastating. In fact, they can be some of the most profitable times if you know what to do. One key piece of advice: learn how to profit from downturns instead of fearing them. For example, holding assets like gold and silver during uncertain times can act as a safety net. But timing is everything. Knowing when to buy and when to sell is what separates those with a wealth mindset from those stuck in financial fear. Another practical tip is to stay informed. Dent's newsletter, for instance, is packed with insights on market trends, demographic shifts, and investment strategies. Resources like these can help you anticipate crashes and position yourself to take advantage of them. It's not just about avoiding losses. It's about spotting opportunities that others miss. For instance, during the 2008 crash, savvy investors scooped up undervalued stocks and real estate, setting themselves up for massive gains when the market rebounded. That's the power of a financial freedom mindset. Finally, resilience is key. Crashes test your ability to stay calm and think strategically. It's easy to fall into a scarcity mindset when the headlines scream doom and gloom. But those who reprogram their minds for wealth see these moments as opportunities. Whether it's diversifying your portfolio, building an emergency fund, or simply staying educated, the goal is to be proactive, not reactive. So, the next time the market wobbles, ask yourself, are you ready to act? Or will you let fear hold you back? Entrepreneurship isn't just about starting a business. It's about building resilience and adapting to challenges. Robert Kiyosaki often says that creativity and risk-taking are the cornerstones of success, especially during tough times. Crashes and downturns may scare most people, but for entrepreneurs, they're opportunities to innovate. Think about it. Some of the most successful companies like Airbnb and Uber were born during economic downturns. It's all about having the right money mindset to see possibilities where others see problems. Failure is another key ingredient in the recipe for entrepreneurial success. Kiyosaki emphasizes that failure isn't the opposite of success. It's part of the journey. Every setback is a lesson, a chance to refine your approach and grow stronger. For example, if a business idea doesn't work out, it's not the end, it's a stepping stone. The difference between those who succeed and those who don't often comes down to mindset. A rich versus poor mindset isn't about money in the bank. It's about how you think, adapt, and persevere. Education is the final piece of the puzzle. Kiyosaki stresses the importance of learning, not just from books, but from real-world experiences. Whether it's studying financial psychology, attending seminars, or networking with like-minded individuals, the goal is to constantly expand your knowledge. Resources like Rich Dad, Poor Dad, or Dent's newsletters can provide invaluable insights. The question is, are you willing to invest in yourself and reprogram your mind for wealth? Because in the world of entrepreneurship, the only limits are the ones you set for yourself. Now that you've uncovered these powerful strategies, the question is, what will you do with them? Will you let fear and subconscious money blocks hold you back? Or will you take action and reprogram your mind for wealth? Remember, the difference between those who thrive during a crash and those who struggle comes down to mindset and preparation. Think about it. What steps can you take today to build your financial freedom mindset? Maybe it's learning more about investment opportunities, diving into books like Rich Dad, Poor Dad, or even rethinking your money beliefs. The key is to start now, because the next market crash isn't a matter of if, it's a matter of when. If you're ready to take control of your financial future, make sure to subscribe to this channel and turn on notifications. And don't keep this knowledge to yourself. Share this content with your family and friends. By spreading these insights, you're not just helping yourself, you're helping others break free from outdated money beliefs and build a wealth mindset too. Don't wait for the perfect moment. It's time to act. So, what's your next move?